My name is Nancy Daoud, Private Wealth Advisor at Ameriprise Financial, and you're watching Taking Stock.
Two minutes to go into the close. What a rally we have here at the S&P 500, expected to finish up in positive territory, better than a full percent. But before we kick off the broadcast, a very special guest, Greg Collins. Greg, who do you have for us here today?
This is Corky. Corky's from Hardy Elementary in Chattanooga, Tennessee.
Oh, that's awesome. And are you affiliated with the school, or the monkey just travels all this way?
My daughter teaches there, and he travels the world when I travel and sends pictures and letters back.
And here he is, live on the trade floor of the New York Stock Exchange. Thank you both for joining us. It's nice to have you here. As the rally continues, let's bring in also the Einstein of Wall Street. That's a tough act to follow. The monkey, I get it.
I'll follow the monkey.
Here we are,
Monkey.
a full percent. We are just a handful of points away from an all-time high. Doesn't feel like it. What's going on?
You know what? It's just we've had a number of big buy programs coming in. I think the market's completely disengaged the whole Iran story. I mean, we've talked about it. This is sort of, people were suffering from so much post-traumatic stress from February, March, April of last year that they were underinvested for the whole time last year. I think people are just getting a jump start on that. We know that this confrontation or conflict is going to end sooner than later, and people want to get a lot of stocks under their belt while they're still at a discount. But think about it. If I were to ask 10 people out on the street, do you realize that the NASDAQ's been up 9 days in a row? They'd go, no way, market's been under pressure. I mean, we're hitting these levels. I was surprised. I do this every day. The fact that we're inches away from record highs in the S&P 500 is spectacular.
Yeah, we got the latest.
The market is the most resilient of any of all time.
Thank you for being here. Time for the closing bell. More Taking Stock right after this. Oh, spectacular. That was the word that the Einstein of Wall Street, the great Peter Tuchman of Trade Moss, used a moment ago to describe these markets. Spectacular indeed. It does not feel like the S&P 500 has been up 9 of the last 10 sessions. Yet here we are, your final tail of the tape on this Tuesday, April 14th. The S&P up 1.1%, the Dow 30 up 0.6, the NYSE Composite Index in positive territory, 0.3%. How about the small caps? The Russell 2000 up 1.3%. It feels like an old school risk on 2023 type of market. You got tech and discretionary leading the way. Amazon, Nvidia, and Microsoft, 3 of the best performers in the Dow on the day. Your Dow laggards. Chevron, the only stock in negative territory in the Dow, more than a full percent to the downside. Salesforce and McDonald's also catching a bid on this day, and it's worth a mention here. The major airlines, JetBlue, simply knocking the cover off the ball. But how about United shares up 2% on the day, and American Airlines up 8%. This after reports of a potential merger, further consolidation in the airline space. We don't know the details, we don't know the timelines, we don't know the asks to the regulators or what the path looks like ahead, but at least for today on Wall Street, investors rewarding the airline stocks. Let's bring in a longtime friend of ours, Luke Lloyd, President and CEO of Lloyd Financial Group. He joins us via Zoom. Luke, it's nice to have you. Your take on these markets, the resiliency of these financial markets, front and center here for another day of big gains. Luke, what are you seeing?
Thanks for having me as always, JD. So look, I'm actually a little irritated right now because there's a lot of people on the street that were saying sell, sell, sell when the market was down 10%. They were saying sell, sell, sell when we recovered up to down 5%. And now they're saying buy when we're back to even. If you've been watching what we've been saying the past few months, again, we don't get things right all the time. We've been saying buy this dip. This was probably one of the easiest dips to buy in a lot of ways because there are so many things trading at a discount, specifically in the software space and specifically in the tech space. I mean, I'll give Microsoft just as an example. Back in 2021, Microsoft was trading at a 33 forward price to earnings ratio. Just a few weeks ago or a week ago, Microsoft was trading at a 19 forward price to earnings ratio. And that's with bigger revenue. That's with just about the same amount of growth in the earnings. And these stocks are basically cut in half from a valuation standpoint. So you're seeing this big pickup rally in tech. I think this is going to continue through because the IGV software index is the most short it was since 2017. So you have a lot of institutional money off sides right now, specifically in software. I think what we're seeing is a big short cover rally going on. I think we're still just, we still got a lot more to go from here. I think maybe a 5 or 10% more on the IGV before we kind of cool down. I think this is a great spot to deploy some capital. We've been deploying capital the past few months. We're the most aggressive we've ever been in our portfolios so far at Lloyd Financial Group.
So IGV up about 1% on the day. I don't know if everyone at home could see my chart. That's more or less the year chart. It's more like the 6-month chart or so. But obviously a downward pressure. Luke, in this environment, do you still like these beaten down software names? Do you still like these tech names, given how slashed a lot of these valuations have been over the last 6 weeks or so?
I love it. I mean, just about a month ago. So the reason why a lot of this stuff sold off in March was, in the past few weeks until about end of last week, was because we went from 2 interest rate cuts back in March to possibly an interest rate hike with oil prices going up so much. So that kind of was a risk-off environment. Higher beta, long-duration stocks got hit. And then you also, for about a 2-week period, had almost short reports coming out. It felt like it was almost facilitated, saying that AI is going to replace real estate, firms, brokerage firms. AI is going to replace logistic firms. AI is going to replace software firms. All AI is going to do is increase productivity and, frankly, make all of these software businesses and every business out there more money. So that increases profit margins, and that means stocks go up. So there almost was this negative attitude for no reason for so long that I think a lot of these names are still on value. So we picked up CoreWeave in the 70s and 80s. That's up to $115 a share. We picked up Intuit. I think Intuit's still good price here. We picked it up about $380, so it's a little down from our cost basis. We picked up even Blue Owl in the private credit space. Has been beaten up because everyone's saying it's a 2008, 2009 scenario in private credit. Well, just because you lock up funds doesn't mean it's an 08, 09 scenario. These vehicles are meant for long duration, 10-year holds, and when investors kind of get that dopamine rush that they get in today's world, that they want their money back quickly, that's not what it's meant to do. So, the fact it's locked up is not necessarily a bad thing. So even the private credit space, I think, is very interesting right now.
Yeah, Luke, I got to leave it there, but I hope you come back. I could do an entire sit-down interview with my man just about the state of the KKRs and the Blue Owls and the private credit of the world. We're up against a hard deadline. Please come back. Luke Lloyd, longtime pal of ours, president and CEO of Lloyd Financial Group. My man, thank you as always. Howie, let's head this way. We'll bring you the latest analyst calls that move the tape today here on Wall Street. We'll start with the latest out of Evercore ISI, initiating coverage for SanDisk. Yeah, that SanDisk had outperformed. They call the company, call the company a structural AI beneficiary with a price target of $1,200. That's not a typo. UBS next up, upgrading Tesla to neutral from sell. They say the EV maker is trading now at much more of a reasonable level. Tesla shares down 26% off of their December highs. Finally, Goldman reiterating Amazon as a buy, lowering its price target down to $275. However, Amazon reports quarterly results on April 30th. We'll take a look at two notables here on the day that trade here at the big board. Two automakers at that. Ford having a strong tape, up 4.5% today. UBS upgrading Ford to buy from neutral. They say the automaker has earnings power. UBS, however, keeping their price target of $15 a share. Shares of Ford are down 4% so far here in 2026. Howard, let's swing around, take a look at the other major automaker on the day with a nice tape. That's General Motors, up almost 3.5%. Deutsche Bank upgrading GM to a buy from a hold rating. They say we see a compelling entry point into the stock after that big pullback from February. Shares of GM down 2% since the start of 2026. Actor and Bitcoin skeptic Ben McKenzie is out with his brand new documentary, Everyone is Lying to You for Money. Here now is a look at part one of my recent interview with Ben McKenzie that we recorded last week here at the New York Stock Exchange. Ben McKenzie joins me now right here overlooking the trading floor of the New York Stock Exchange. He is the writer, director, and co-producer of the brand new film, Everybody is Lying to You for Money. He's also the co-author of the book, Easy Money. Really nice to have you. Congrats. Thanks for joining us.
Thanks for having me.
Worthless, hyped up fraud, the pet rock. These are all things that Jamie Dimon of JP Morgan Chase has previously said about Bitcoin. You agree?
Yeah, or Warren Buffett, rat poison. Look, what do those guys know about money, right? I'm sure I could trust anonymous bots on Twitter more than guys like that. Yeah, it's a fascinating group of people who are skeptical about crypto, right? It's sort of some of the most accomplished people in finance and investing, and then, former teen idols like myself, and cryptographers are very skeptical of crypto, actually, because the technology that crypto uses is quite old. Blockchain is quite old and really isn't used for much. So yeah, it's a fascinating group. But you know, it's fun to be a part of this eccentric group. I can't believe I found myself here. It's quite a story.
How did you find yourself here?
Oh boy, we go into in the film, but the pandemic hit, and I had previously done 3 TV series, pretty much back to back to back, The OC, Southland, and Gotham. And I'd met my now wife on the 3rd show. We started a family, and I was kind of just looking to do something different, right? I'd been making a lot of TV, and it was fun, but I kind of needed to just find my mojo again. I did a play on Broadway. It was fantastic, and it closed on March 2nd of 2020. And the next week, I was about to do a pilot, and the next week, the world shut down due to COVID. And so I'm sitting around, I got nothing to do. And a buddy of mine comes to me and he says, I should buy Bitcoin. My buddy Dave, I've known since college, but he's given me terrible financial advice before. He encouraged me when I was in my 20s to invest in this penny stock. And sure enough, we put our money in and lost it. And you know, he wasn't scamming me, but when Dave came back and said I should buy Bitcoin in 2022, I said, I'm not going to do that, but tell me more. I have a degree in economics as an undergraduate, and I hadn't used it 20 years in showbiz, but I dusted it off, and I just became fascinated by it. Once I started looking at it, I couldn't stop.
And the film is incredible for many reasons. At one point in the film, you ask, what do these celebrities know about cryptocurrencies? Matt Damon, Floyd Mayweather, Tom Brady. What role at that time, and everyone remembers that Matt Damon ad in particular, at the time, what role do you think that played in terms of public perception of Bitcoin?
Oh, it was massively helpful, right? I mean, if you think of cryptocurrency as I do, like a Ponzi scheme or a multi-level marketing scheme, then you need, as the Ponzi grows, you have to, and you're trying to increase the ownership over this, because obviously the original investors are getting paid out by the new investors, right? Then you need an increasingly big megaphone to draw those people in. And so at the end of it, it sort of makes sense that you get the most famous people in the world shilling, by the way, shilling a financial product. They're not selling you soap or a car or something. I mean, celebrities have always shilled products. There's nothing wrong with that. I make fun of it in the movie. My wife is an actress. She's done it too. But there's a massive difference between a financial product, obviously, and a consumer product, right? You're not supposed to give people financial advice if you're not a licensed financial advisor. Technically, it's illegal. That's why I try not to give people financial advice, even though I say crypto's very dangerous, be careful. So I didn't know much about crypto when I first started it, but I knew that Matt Damon didn't know anything about crypto either, and yet he was selling it, and that seemed wrong. And it's not just Damon, of course, not trying to single him out, but there were, were and are hundreds of celebrities that sold it. I just thought that was wrong. And when I looked under the hood of crypto and who was involved, including some of the people who are now in jail, I thought, this is bad. We're talking about a bubble that's going to pop. This is 2021, when crypto was in its last bubble. And sure enough, it did. It popped almost immediately, and that's what I document in the movie, is that crash, and I interview 2 of the guys who are now in jail.
You should never invest in anything you don't understand. That's one of your lines in the film. I wish you nothing but the best. Ben McKenzie, writer, director, co-producer of the brand new film, Everybody is Lying to You for Money, co-author of the book, Easy Money. It's awesome. Congratulations.
Thanks, man.
Thanks for joining us.
Thank you.
Welcome back to Taking Stock. Our next guest of the broadcast joins us now live from the trading floor of the New York Stock Exchange, Mark Boiron, the CEO of Polygon. Nice to have you. Thanks for taking the time for us here today.
Thanks for having me. I appreciate it.
So right now, through the lens of traditional finance, money moves through layers. You got payment processors, you got banks, etc. Talk to me about how your open money stack differs from the process a lot of people might be a bit more familiar with.
Yeah, so the whole idea with the Open Money Stack is that we can have one fully integrated payment stack that allows you to move money anywhere in the world seamlessly, right? So you think of like how you typically move money, and basically what you're going to be met with is friction, right? You're like a compliance check over here, you're going to have something held up over there, you're going to have no idea where your payment's actually at. With the Open Money Stack, you can onboard money onto a chain, You can move it anywhere in the world. You can offboard it. You can move it between chains. So what you really get is this idea that, like, I always think back at like Christmas 5 years ago when somebody said, send me money, and I couldn't send money back in Canada. I was like, okay, how do I actually do this? And at this point in time, I'd be like, I can take my stable coins, I can send it to you back home, and you'd have it immediately.
What are the difficulties, the biggest headwinds with building something like an open money stack? Because it sounds great for the end user, but we have no idea what it takes to actually build brand new infrastructure like this.
Yeah, it really comes down to like how you think about the structure, right? So most of the times when you look at the solutions that exist today, really what you're talking about is 7 to 8 different vendors that you're like taping together. And when you're taping together vendors, that friction is actually felt. So the whole idea behind the Open Money Stack is that we could create one single API that you plug into, and you can get the benefits of that money movement anywhere in the world, the way that we were just talking about.
How difficult, if at all, is it to incentivize developers to build apps natively directly onto Polygon?
Yeah, this hasn't really been a challenge at all. There's a few reasons for it. First is, I think with Polymarket, fully built on Polygon and been on Polygon for a long time, everyone knows that you can build a fantastic application and have it be very, very successful. But on top of that, like they've seen, I think we're around $2.5 trillion now transacted on Polygon. I think we've got over 21% of all stablecoin USD transactions on Polygon. And so when you consistently see delivery of like high quality transactions executed in seconds and in some cases milliseconds, then you end up feeling very confident that you can build your application there and be very successful.
What do you see ultimately as being Polygon's biggest edge in a world where the big banks more and more are having their own crypto pushes?
Yeah, we kind of see it as an opportunity to work with the banks, actually, right? So banks really aren't touching stablecoins these days, right? They're like investigating tokenized deposits. They understand that like that's the area where they should focus on. The idea of like being able to move money anywhere in the world is not something that they've actually been focused on in the same way. So for us, the opportunity is that kind of interaction between stablecoins and tokenized deposits, right? Where you're able to convert those tokenized deposits into stablecoins and then use them however you want. Send money back home, earn off of those stablecoins, tons of different like use cases that you can have that you can't necessarily do within the banking system.
Mark, it's great to have you. The worst part about this interview is that I'm out of time and have to leave it there, so please come see us again from Arizona. Really a pleasure. Mark Boiron, CEO of Polygon, congratulations. Thanks for doing this.
Thanks for having me.
All right, we'll be back with a lot more Taking Stock right after this. Welcome back to the show. Niccolo De Masi joins us now here on the trading floor. He is the chairman and CEO of IonQ. It's nice to have you here. Congrats on doing the bell as well.
Thank you. Honor and pleasure always.
So you're building a more precise, stable quantum computer versus the rivals out there. Talk to me first and foremost about what that means in terms that are maybe a little bit more digestible for someone watching who might not be fully familiar.
Well, look, we are 30 years in the making. So we were founded in '95, and we've been honing our craft ever since then. We actually are the world's biggest quantum company in history by any measure: market cap, revenue, balance sheet, employees, patents, PhDs. We were the first quantum company to reach 7 figures of revenue, 8 figures of revenue, and 9 figures of revenue. And our ambition is, of course, to be the first to reach 10 figures of revenue. When I think about our announcements this morning, of which we had 4 very significant ones, we announced a deepening of our partnership with the Air Force Research Lab, which is building quantum networked quantum computers. We announced a contract win with DARPA around our quantum memory to build quantum data centers. We announced expansion of our partnership with UMD. And I think actually most interesting, because I consider IonQ to very much be the bellwether of our sector. We were the first public company, we remain the largest, and we're not only making the world's best quantum computers, but we're also a merchant supplier to other quantum companies. And so today we announced our benchmarking exercise that shows that our quantum computers use the least energy, run the best solutions fastest, and that means we have a cost advantage, solution advantage, and a time to solution advantage.
Let me ask you about the DARPA component a bit. That shows pretty serious government and national security interest in the broader space as well. What do those conversations look like about their needs that clearly the U.S. government feels you're pretty much in a one-of-one category to help them address?
I think that's right. We are the only hardware award for DARPA on the quantum data center, quantum memory front. We're also in the DARPA quantum benchmarking initiative, and that's been going for a few years. You know, we said a year ago at World Quantum Day, this is a tradition for us, that we thought that what's called Q Day, which is when our quantum computers can crack cryptography, was going to happen as much as 4 or 5 years earlier than people previously thought. Now, a year ago, we looked at our roadmap and said we could do that even by the end of this administration, potentially. A year later, I am not surprised to hear that the rest of our competitors agree with us, and Q Day is coming sooner. So everybody needs to get quantum security into their business, into their government, into their state, local institution, because when cryptography is crackable by the bad guys, not us, civilization as we know it could be a real problem.
Niccolo De Masi, Chairman and CEO of IonQ, congrats for doing the bell, and thanks a lot for joining us here on the show. It's nice to have you.
Thank you, always a pleasure.
A lot more Taking Stock coming up right after this.
welcome back. I'm Scarlett Sieber from Money 2020, and today I get to have a guest sitting with me. I have the lovely Virginia Alvarez, part of the Money 2020 team. So Virginia, thank you for being with us today.
No, thank you for having me here, Scarlett.
Absolutely. So I get to see the back end of what happens at Money 2020 all the time, and we are in crunch time now. You are in crunch time here in April. Our call for content for the US show is open, and you get thousands of submissions every year. So talk to me a little bit about what you're seeing. I know you and the team spent a lot of time thinking about these themes and pillars. What are those themes and pillars? Tell the world. They want to know.
Well, thank you for asking. Yes, you're right. We have a lot of submissions, and you just the call for content opens last week. And I mean, to be honest, we have to work a lot to go through all of them. So talking about the pillars, we have 4. You know, every year we kind of try to have the same number. The first one is about cross-border modernization, which is basically everything that all the signals that you see in the industry, real-time payments, 24/7 access, and, you know, new rails, which is basically the main conversation for the show or to the show. The second pillar is about the great technology as the great equalizer, which is about AI, autonomous agents, agentic commerce, and all the access that embedding that technology will give us to, you know, all the consumers, basically. The third is my favorite one, which is about partnership as a way to scale. You know, we have seen that for a long time, but this year is big. Companies are acquiring other companies to go bigger, and companies or fintechs are pursuing licenses to really become banks. So that's an excited pillar too. And the last one, the best one, my favorite too, is about regulations. Like really putting the guardrails about regulations and new policy about cross-border payments, given that last year we got the approval of the Genius Act, and this year we're talking about the Clarity Act potentially.
Very interesting. I mean, all 4 of them, I remember looking at the first draft of them and being super exciting. So let's dive into each one a little bit, but I want to start with the technology as the great equalizer. I love that concept. I think it's really hits on a bunch of different points. When you sit back and think about the role that innovation plays in the democratization of financial services, what gets you excited about that? I mean, we talk about this a lot off camera. Where are you seeing the true great equalization coming?
Well, a couple of points there. First, technology now is embedded in every single system that is created to generate in the payments of the financial services industry, either to lowering the cost, either to accelerate payments, also to protect every single transaction, which is basically embedded fraud from the get-go. And the last piece is moving things faster, which is something that I kind of mentioned in pillar 1, but this is more specifically about the second pillar, making access 24/7 for everyone. This is something that all of us as a consumers have been pushing for. The good thing is these technologies are now embedded in different platforms that everybody have in their phones now. It's not only about going to the bank. You have those apps in your phone, so you can have that technology at your hand.
With these thousands of applications that you get for the call for content, any advice for the viewers who want to submit? What would you say? What are you looking for? What are you and the team looking for when you're reviewing those submissions?
I would like to see a good amount of submissions for each of the pillars. Of course, I already mentioned the ones that are more my favorite ones. I believe I don't have a specific thing about it. I mean, be innovative in the way that you write those submissions. Don't think about, oh, other companies are talking about the same and it's not gonna be original. No, focus on that specific angle that you really know about your company. Nobody else knows about that. And also see who else you can bring as a partner for that panel, right? To make it, sometimes it's better some your partners talk about you than you will talk about you, right?
Totally.
So that would be my advice for the people outside, like that want to apply.
Amazing. Well, thank you so much, Virginia. This was Virginia Alvarez from Money 2020. Money 2020 US is the 18th to the 21st of October. Virginia will be there. I will be there. It will be fun. We look forward to seeing you join us.
Tomorrow morning here on Wall Street, we will get the latest quarterly results from Bank of America as well as JP Morgan as we officially round out the biggest financial institutions, kicking us off here for another slate of quarterly results. We'll also get the latest results from JP Hunt Transportation after the bell tomorrow. Your final tail of the tape, the S&P in positive territory, 1.1%, the Dow 30 up 0.6, the NYSE Composite Index up 0.3, and the small caps up 1.3%. Special thanks to all of our guests today for joining the show, and to you at home for watching. Have a good one. We'll see you again tomorrow. Woo!